In this video, I'll be sharing with you simple method of analysis and how you can find your entry based on the smart money method of trading. So first, we'll begin by determining what is the trend of the market. That's the first thing. The second thing you will do is for you to go ahead. After you determine your trend, you consider liquidity. After liquidity, you identify your point of interest, which is your POI. After your point of interest, you wait for price to pull back to your point of interest. And then after that pullback, you now get your what? Entry confirmation. So let's go into the analysis. This is crash 1000. So looking at this, price has been moving the other way around. So from here we begin to have what? We have lower high, lower low, lower high, lower low, lower high, lower low, lower high, and a lower low. So this is how perfect and how simple we can now determine our trend. The next thing is, automatically we know every structural point is our point of interest, which means that all of this lower high, because this is a downtrend, we are considering the lower highs. All of this lower high is automatic point of interest of our order block. So what do? We will now mark out our lower high. So here we have another block here. This is our lower high height. Then the next lower high that we had is this one. This is our lower high. Then we have another lower high, which is this. So this is a second lower high, though they coincide almost in the same zone. And then we have this lower high. So all of these are our order block. So now I've determined trend that we have identified. We are now identifying point of interest. So these are our lower high. Now we are going to focus on the current price scenario. What is the current one? Which is this one. This is our recent order block. So this is what we are focusing on. So this is our lower high here. What is the next thing we want to see? The next thing we want to see now, after now we have determined our lower high. Let me show you something. Here is a lower low. Here is a lower high. We have marked the order block. So let us look for another point of interest, a fair value gap. After the order block, we have a fair value gap. Here is the fair value gap. To have this fair value gap, we have a smart money cube. This is our smart money cube. But this smart money cube has already been, price has break through it, so it is no longer valid. So now we have done all of this. So what are we expecting? We are expecting the price should pull back into this fair value gap, which is an imbalance. Give us a bearish signal and sell to the downside. That is one condition. Or price will break through it, pull into this order block here, and then sell back to the downside. However, remember we said we are looking for considering liquidity. So the liquidity of this side has already been taken by this price that moved to the downside. But now we have a dynamic liquidity sitting here. This is a liquidity that is sitting here. So mind you, this particular order block here has not been mitigated. This other block has not been mitigated. This one too has not been mitigated. So if you look carefully, we have a liquidity that is sitting here. There is a liquidity sit-up. A liquidity is sitting here, and another liquidity is as well sitting here. This is a liquidity sit-up. So what am I trying to say? Price is always attracted to this liquidity. This liquidity is here to be mitigated, here to be taken, and this one too is here to be taken. So mind you, price will pull into this other block, and they were expecting price to drop. But if price can decide to break through this other block, why? Because of this liquidity. So price can choose to pull all the way to this upside in order to take away this liquidity, then mitigate this other block and begin to sell. However, better still, we have this other block here that has not been mitigated. So price can as well choose to leave here, take this liquidity, and also come to take away this particular liquidity. So price will now pull, take away this liquidity, come here, mitigate, and then continue back to the downside. This is how exactly it works. So the fact that price take away this liquidity, we know the purpose, either to mitigate this other block, or price pull from there, take away this other liquidity in order to mitigate this other block. But however, when price begins to go up to these zones now, you might begin to see a structure formation that maybe price will now move to this zone, take away this liquidity, maybe come down a little, move again to take away this liquidity, then maybe come back a little. That is not, it will be a break of structure to the upside, but however, it is a pattern. Price cannot just fly into that zone. So price will now move from here again and then move to this place. Now that it has come into that zone, has taken away this liquidity, it will now come back down. It will now be like another break of structure to the downside, and then it will continue falling and falling. So this is exactly how price behaves, and I believed that this is brought light to your trade. Thank you for watching. If you are yet to subscribe, smash the subscribe button, turn on your notification bell so you'll be the first to get notified when we upload our next video. Thank you, and see you in our subsequent video.